And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for Friday, March 1st. Today, as usual, we're going to take a look at where we closed for the week. The markets are at new highs, and then beyond, there is sector rotation taking shape that I do want to share with you. And then also some of the headline news that drove the markets last week. And last up, viewer question of the week, and it's going to be a follow-up to last week's downtrend reversal tutorial on Adobe, and then also a question relating to advanced micro AMD and the best time frame of chart to use for trading that name. So here we are with the news last week. Earlier we did hear that new home sales, they inched higher in January. That was good for those home building stocks. Also, we did see interest rates pull back, and that was another metric that helped those home builders outperform the broader markets last week. Also, consumer confidence fell a little bit due to political uncertainty. Not a whole lot there, because I will share with you that retail stocks continue to trade higher, and we'll look at why. Also, Q4 GDP numbers were revised again. They were revised lower, but still 3.2%. They remain very strong. And then on Thursday, we got core PCE. This is inflation data that the Federal Reserve looks very closely at. And it did not show much in the way of surprises. The markets took the numbers in stride and moved on. And I'll also share with you from here as far as where the strength was last week and why. So let's go ahead and take a look at where did the markets close for the week. And here we are, a daily price chart of the S&P 500. As mentioned, it did hit a new high this week. Most of that upside price action taking place today. And we can also see the RSI and MACD in positive territory, trending higher. So that uptrend does remain very firmly in place. Let's go ahead and take a look at the 11 sectors within the broader markets. This is where that sector rotation is going to potentially reveal itself. So we're looking at a 2-month daily price chart view of the 11 sectors. We have a relative strength indicator, and we've sorted the sectors in descending order. Your stronger groups up here in the forefront, weaker groups down below. And of note to me is the fact that staples, utilities, and REIT stocks, which had been up here in the forefront for several weeks, are not only continuing to deteriorate, they're down here as the weakest performers. In turn, tech, which had been in this lower quartile for a couple of weeks, is really ascending up to that upper stronger area. Of course, it was a top performer this week. I'll share with you as we move through why. And we can see this nice base breakout, MACD black line up through the red, poised to shape up, and nice volume on the move into technology stocks. And then also taking a look at these sectors, wanted to share with you that the very strong healthcare sector did pull back to this 21-day simple moving average. Very orderly pullback. We've seen that take place before, and then the rally is resumed. I'm on the lookout for that to take place. If you want to stay on top of that, as well as which names in tech and in healthcare that are the best candidates to not only participate but outperform, go ahead and try on my MEM Edge report. You can use that link in the description below. Now from here, let's go ahead and take a look at some underlying industry groups within these sectors, get really refined as far as where those money flows are shaping up, so in turn you can participate. So first up here, semiconductor stocks, big outperformer, up over 6% last week, with most of that move taking place today on Friday. We were up 4.3%. As mentioned, we'll take a look at advanced micro AMD, one of the biggest movers certainly this week. But taking a look at this industry group, you can see that these positive momentum indications are remaining positive. Both the MACD and the RSI, nice high volume on today's rally as individuals want to participate in this move into semiconductors and other AI-related stocks that are helping move tech higher. Talked about home builders. This is an area that I highlighted last week as well, as we had this nice base breakout shaping up with this momentum shift in that MACD into positive territory. You can see it is entering an overbought position. This is XHB, the home builders ETF, but certainly that uptrend is very firmly in place. Also, among these underlying industry groups, another area I've been talking about for a couple of weeks, and that is retail XRT. I talked about the group bearing well, and in essence, all about strong earnings numbers among many of the names underlying this group. And we can see that the uptrend remains very firmly in place with XRT. And then also moving through these sub-industry groupings, I did want to share with you that software, while it did outperform, it's struggling a bit. We do have positive momentum, however, with a move back above the 10 and 21 day simple moving average. You can see that RSI now in positive territory and the MACD poised for a crossover. Of course, we're going to take a look at Adobe in that software space as we move through today's show. I did want to share with you interest rates. I talked about the decline. It is now at 4.18. That's the yield on that 10-year treasury. Ideally, we do want to get it back below 4, but we are seeing really good vibrancy in the markets despite a relatively elevated yield on this 10-year treasury. But the good news now is that we do seem to be heading lower, certainly after that inflation data coming in on Thursday. Now, from here, let's go ahead and take a look at Adobe. For those of you that missed my show last week, you can take a look because I did highlight the characteristics needed in order to confirm a downtrend reversal. Adobe did fall out of favor after a competing product to their AI design systems was revealed, but we are seeing the stock slowly wedge higher. And I'm using this May period downtrend reversal as precedent. We want to get this MACD black line up through the red, get that crossover, and then get that RSI up above 50. So despite a 3% rally in Adobe this week, we do still have work to do from my work before entering into the stock. I would like to see a little more by way of volume on the buying to indicate that there is accumulation characteristics taking shape as we saw last May. And then we can take a look at Advanced Micro, one of the bigger movers among semiconductor stocks last week. And what I wanted to share with you is how these different views on the chart timeframes are really going to help shape your entry or exit point. And first up here is an intraday 1 hour chart. And what we can see is certainly for the latter part of January into February, it was a very volatile period in essence for Advanced Micro, and you really would have gotten shaken out and then back in based on these momentum indicators and the move above and below the 5 and 13 hour simple moving average. So from here, I do want to take you to a daily chart for Advanced Micro as you zoom out, because really what you were looking at in that intraday is this back and fill period of consolidation. So as we drill out, of course, the chart is going to really lose a lot of that choppiness and smooth it out just a bit. And we can see also last up here on a weekly how it really smooths it out even further. And take a look, that intraday 1 hour choppiness really looks like a mere blip. So for longer term investors, go ahead and use this weekly chart. It's going to keep you in the stock during these periods of consolidation that can be quite volatile. And then also keep in mind that AMD on this weekly chart is getting a little bit stretched, but let's go ahead back to that daily chart, and I will share with you a couple of metrics that really defined AMD technically as a buy. Let's take a look at Thursday's big gap up on news of their release of AI chips and supply really not outpacing demand. We can see this nice high volume. Let's take a look at this MACD crossover, black line up through the red, signaling a new uptrend. During this pullback to this 21-day simple moving average, your MACD and RSI remained in positive territory. However, again, it was that MACD crossover on the daily that really told me that the stock had experienced a new uptrend, and it was coupled with a base breakout. We saw a nice carry-on rally into today beyond that. As investors really want to participate in this move, you will want to use those different time frames of chart as you move through this move into advanced micro. Have a great weekend. I'll see you here again next Friday.